Hello and welcome to Title Talking Real Estate in New York. I'm Brenda Posner and today we have Tony Ayala with us. So Tony, tell us a little bit about yourself.
Hello, everyone. So I've been in the mortgage industry since 2010. I'm a sales manager for Loan Depot in Astoria, Queens, New York. I specialize in first-time home buyers purchasing homes with down payment assistance. I specialize in co-ops and condominiums in New York City, and I work a lot in the luxury real estate space with jumbo loan programs.
So Tony, today we're going to talk about what are the five top mortgage don'ts when applying for a mortgage.
So typically when you're applying for a mortgage, there's a lot of paperwork involved. Paperwork regarding your income documents, your asset documents, and your credit report profile. So when applying for a mortgage, the first thing that we recommend our buyers is to don't move money around from one account to another. When you're transferring funds from one bank account to a different bank account, essentially, we have to document those transfers and ask you, where did the money come from? And if you're doing that multiple times in a 2-month period, then it just causes, extra paperwork for you to provide and for our bank underwriters to review. So that's the first thing that I pretty much try to recommend. The second thing is to don't apply for new credit. A lot of times when people are going through the mortgage process, they ask me, hey, Tony, can I apply for a new credit card with 0% interest? Or I'm looking to buy this house and I need a new car. Can I apply for a new vehicle? Or different reasons that they may have to apply for new credit. So the answer is always no. I mean, you definitely can, but we advise you not to, because if your numbers are tight to qualify and you apply for new credit, we have to now count this new credit against your profile. And if sometimes it may be a deal breaker in some situations, or sometimes it could just be document intense. You apply for a new credit card, but the credit card statement is not available yet. And now we have to wait a month for the documentation to be available to show what the monthly payment is. So it could just be a little bit of a headache. So we always recommend not to apply for new credit. A third is to don't pay your bills late. Sometimes, for whatever reason, people may think that they need to save as much money as possible and they want to hold off on paying their bills, or maybe they're just excited about the home buying process and they may overlook on making all their payments. Definitely pay all your bills on time, especially right before you apply for a mortgage, because if there's a recent late, then the bank is going to question, why are you late? And they're going to question, is this person responsible? Do they have the ability to repay the mortgage? And also, do they have the will to repay the mortgage? Just because you have a lot of income, you can just have a lot of oversight. Paying your bills late is a huge red flag for a lender. Another don't we recommend is not to switch jobs. Now, this is kind of a gray area because obviously if you're changing your jobs to a higher paying job or a more stable position, then that's a benefit. But if it's kind of a lateral move, if you can hold off on switching jobs, that would be an ideal situation. If a buyer changes jobs, it's possible that the new job may require more documentation or may require a longer period in that certain position to determine your income. That could potentially disqualify someone who was previously approved. So that's a big one you want to discuss with your lender before doing. And then the last one I want to mention is don't make any major purchases. When we're reviewing your bank statements, we actually look to see your transaction history. And if we see any large payments coming out of your bank, for example, $20,000 payment towards something which you can't identify, we'll ask you about that. And for the most part, the lender is looking to see if you're applying for financing somewhere else for a different product. For example, if we see, $20,000 coming out of your account, that may trigger us to think, okay, maybe this person is buying a different property, or maybe this person is putting a down payment on a car, or maybe this person is paying back a loan to someone. It could be any reason, and it would just trigger the lender to ask these questions and just cause the need for you to provide additional paperwork.
These sound like very common problems that, you're going to encounter. How often do these happen?
I mean, to be honest with you, it happens like on every single loan. Everyone's moving money around, so obviously we'll see that happen. It's just the goal is to limit a lot of these activities because if you're doing a little bit of everything, it's just going to delay the mortgage process and just cause additional paperwork and just take longer for your loan to get approved. And in some cases, you don't have the documentation available yet to document the money moving around because maybe the new bank statement is not available yet, or if you apply for new credit cards, 0% interest, but the credit card statement is not available yet, or if you change jobs and your new pay stub is not available yet. All of these factors impact your overall loan process and also your experience. You may be upset and say, "Oh man, I shouldn't have done that," or because you did this, now it's just taking longer for the overall process to proceed.
Yes, no, I could see that. They seem like common enough issues. So
Everyone
thank
does
you.
it.
Yeah, I would say I can definitely imagine everyone does it, and people want to make a major purchase, like buying furniture for their new home.
Yeah, that's a good point.
So, do you suggest, when people are thinking about doing this, do you suggest having them call you first before they do any of these types of things?
We're here to guide you through the process. So anytime any of this is happening, even if you have the majority of your funds in one account and you want to consolidate your accounts into one, just speak to your lender and ask, should you do it? And if I'll never want to discourage someone from getting a better paying job, because obviously higher income results in an easier loan approval, but it just depends on your type of situation. So definitely discuss, and we'll just give you the pros and the cons of making that decision and then leave it up to you. But ultimately, any of this will impact your loan. Most of it we can overcome the majority of the stuff. It's just causes for a longer loan process to be completed.
Well, great advice. Thank you so much, Tony. Everyone, thanks for joining us.